JFD, just fair and direct.
Okay, hello and welcome everyone. Welcome to JFD Traders Espresso with me, Darius Anucauskas. Today is the 11th of August 2020. So yep, welcome everyone. Welcome to this Tuesday's morning session where we're going to have a quick look at the markets. A few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute any invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest and we can continue. Okay, so now then, also just before we jump into the charts, quick mentioning of our JFD YouTube channel, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website and specifically our JFD research page, which we also update on a daily basis. So yeah, feel free to visit us here on jfdbank.com and click on the research tab right there on the top. Now I'm going to jump straight into the chart. So as you probably are aware, the situation with the coronavirus is the same still, so I'll pick up on that one maybe later on in my trader's tea time, just to see how everything's kind of getting along there. Yeah, let's jump straight into the charts. Now the first one I want to touch on here is Nikkei. Nikkei today opened up. I mean, yesterday was closed, but today it opened up with a nice push higher, and you can see it's back above the 21-day EMA, which is great news for the buyers. And last week I was telling you guys that if this index drops and stays below the 22,285 territory, then it kind of increases the chances of a potential move lower. However, that didn't happen. Even on Friday we saw a break of that area, but eventually this area kind of did continue to provide support, and yep, this is the result that we're having. We're having a nice push higher here. And the index kind of got close to its downside resistance line taken from the high of the 10th of June. Now, don't get me wrong, this one is a little bit of on the tentative side, so what we're going to focus here mainly on will be the high of the 15th of July, or in other words, the highest point of July near the 22,965 territory. A nice good pop above it would confirm a forthcoming higher high, and of course then it could send the price towards the highest point of June right here, which is roughly around the 23,185-86 zone, approximately around there. So basically these are two very important levels, or should I say resistance barriers to keep an eye on. But if both of these get easily cleared, then yep, this could open the door towards further advances here, and then yep, we could start looking at levels we saw here in February, these February highs here. So yeah, but again, let's keep it short and simple. For now, all eyes are going to be on this little short-term downside line and this 22,965 territory. If this downside line somehow does continue to provide resistance, then yes, of course, we could see a bit of a correction, maybe back down here. However, again, still the same idea remains. In order to maybe consider lower areas here, a drop below the 22,285 territory would be needed. Jumping into Shanghai Composite now, another one from Asia, another index here, which as you can see is pushing nicely to the upside. Of course, not gaining as much as Nikkei, but yeah, it's still looking quite okay. Yesterday I talked about this one, and I was saying that as long as it stays above this 3,336 territory, then there's a good chance we could see this one moving towards the July high here near the 3,457 territory. So for now, we're just going to be aiming for that level. In case this suddenly starts dropping back below the 3,336 territory here, then yes, this could kind of raise concerns here. However, probably just to be on the safe side, maybe a drop below this level right here, the low of the 7th of August, below the 3000, which the low of the 7th of August, which is at 3307 territory, roughly around here. A drop below this could open the door towards lower areas, because at the same time the index would be placed below the 21-day EMA, and maybe some sellers could see this as an opportunity to step in. So that's why we'll be very careful here, guys. For now, everything's looking quite positive here. But yep, of course, be very careful. And like I said, a drop below the 3,336 territory, which by the way is the highest point of March of 2018, could in a way kind of maybe scare the bulls a little away, well, I mean, more of the bulls could disappear if, like I said, if the index drops below the 3,307 zone. So keep your eyes on that one. A quick update on the Hang Seng here, Hong Kong's Hang Seng, and yep, look at this beautiful move here. The index rebounded nicely from this upside support line taken from the low of the 19th of March, so everything's looking very technical here, and you can see today it's pushing higher, and it made its way above the 21-day EMA. So yep, in a way it kind of increases the chances for its kind of continuation move north. However, just to be on the safe side, preferably a push above the 25,200 zone right here. Maybe that could just kind of be that breaking point after which from where the let's say more bulls could be joining in. So again, for now, guys, it is quite interesting here. Yes, it rebounded nicely here from this upside support line. Yeah, yesterday it formed this nice doji here, which is seen as a reversal sign, and yep, everything's for now working out nicely. However, like I said, let's wait for that confirmation break above the 25,200 zone marked by the high of last week, and then yes, we could consider a larger move higher. Jumping into the DAX, the German DAX here, and here you can see that the index remained yesterday below this level. Now, I talked a lot about this 12,773 territory, so in a way kind of everything is still kind of looking nice and dandy, if we can use it this way. Basically what we need here is still, I'll stick to the same rule. We need that confirmation break above the 12,773 territory. So looking at the cash index right now, we can see that we are already getting that pop. So everything's kind of looking quite positive here. So we may see a further move north here towards the 12,913 zone, which, as you can see here, acted as a very nice area of resistance back in June, which is also the highest point of June. And then, yes, of course, if that gets broken, then a further acceleration to the upside could be possible. But again, this is what I was saying yesterday, guys. This is what I was talking about, that this little kind of formation here, pattern, yep, could open the door towards higher levels, especially if the index pushes above the 12,773 territory, and it is doing exactly that right now on the cash index. Now, jumping into DXY, and yep, we had another nice move higher here. DXY is approaching this key resistance level near the 93.81 zone. I talked about this, and we need a nice break above it, a nice daily close, of course, ideally above this level, in order to aim for some higher levels. For now, yep, for now we will just, like I said, we'll stay a little bit on the neutral side, although all this is looking quite nice here for the bulls. We could be getting that nice double bottom here, but yeah, like I said, let's wait for that neckline break, which is around the 93.81 zone, and also in addition to that, a close would be nice as well. So just for that extra confirmation, and then yep, we could consider maybe a larger move higher here, which by the way, could be considered still as a corrective mode, because a corrective move, because we are trading below this downside resistance line taken from the high of the 23rd of March. Gold is, well, I mean, you can see that the dollar is rising and gold is getting falling under pressure, under some selling pressure, and yep, everything's kind of going in line with the idea that I've mentioned yesterday, so that we could see a bit of a decline here, maybe even a drop below that psychological 2000 territory, where the commodity could hit the 1981 territory, and well, if it provides decent support here, we could see a nice rebound and a push higher. Now, of course, if it falls below the 1981 zone, then yep, we could maybe consider maybe a larger correction here. However, we would consider that larger correction if the price falls below the 1940 zone right here, because at the same time this would place the commodity below the 21-day EMA here, shown as the yellow line. So keep your eyes on that one, guys. For now, the main target is around the 1981 zone, approximately around, and then I'll pick up on that one and I'll see what it wants to do after. Brent oil. So I haven't looked at this for quite a while, but to be honest, I mean, not much is happening here. It's a very dull, boring market right now. I mean, if you're into more of bigger swings, if you're more of a scalper, maybe this is perfect for you guys for now. But again, looking at this picture here, it keeps on flirting with this 200-day EMA, with this 45.20 zone, and last week it seemed that yes, finally we could see maybe a nice break here, and we did get that break, but we didn't really get that daily close. And as you can see, this is the effect. This is what I was saying, that if we do get that daily close above that 200-day EMA, then this could increase the chances for this commodity to drift further north. However, it didn't close, and yep, this is the result that we're having. It did kind of decline a little bit. However, right now we're seeing kind of an attempt by the bulls to kind of lift the black liquid up again. However, I will stick to the same idea as I've mentioned before, that a nice good daily close above this 200-day EMA could do the trick for more buyers. Quick jump into Ripple, and just a quick update here. So Ripple is rebounding nicely from this area, from the 0.2858 territory. I talked about this one. That's, by the way, the highest point of the high of the 24th of February of this year. So yep, for now everything's kind of looking quite interesting here. Basically, yesterday I was saying that it could be a possible flag here as well, which for now seems to be the case. And let me just quickly draw this one right here. So basically we are breaking the upper side of this flag, and everything's kind of looking quite positive. However, we have seen this happening many times, where, for example, it could break the flag, it could be forming the flag, it could travel higher but failed, let's say, for example, to move above the recent high here, for example, in this case, the current highest point of August, near the 0.3262 zone, and then kind of reverse back to the downside. So for example, it could travel a little bit higher, test this area, the 0.3262 territory, and then fail to move above it and reverse to the downside, this way kind of forming a nice range here. But again, at the moment, yes, we are going to stay a little bit, let's say, somewhat bullish on this one, just because, like I said, we are seeing a nice bullish flag here. However, to get excited about larger extensions to the upside, a push above the 0.3262 level would be needed. So that's why I'd be very careful. In case this somehow starts dropping back down and falls below the 0.2858 zone, and most importantly, closes below that area, closes a daily candle, then, well, I mean, then yep, we could see maybe a bit of a larger correction here to the downside. We did get these false breakouts recently, but we never saw the daily candle staying below this area. So that's why, if something like that happens, if we do see that daily candle staying below this, then yep, aim for maybe a bit of a larger correction to the downside. AUDJPY, quick update here. So the pair continues to balance above the short-term upside support line taken from the low the 22nd of June. So everything's kind of looking quite interesting here. However, on the broader scale here, if you're looking for something more, or maybe a little bit medium term, then wait for a push above this 76.79 territory right here in order to kind of aim for some higher levels, because at the moment, yes, the pair could travel a little bit higher. It could actually move all the way towards this 0.7679 territory, which if provides resistance again, then yep, we could fall, the pair could fall under some selling pressure again and move maybe back down. So that's why from the kind of bigger, on the bigger picture, probably wait for that confirmation break above the 76.79 territory and then kind of aim for some higher levels. In the meantime, like I said, from the very short term perspective, if I jump into a 4-hour chart very quickly on this one, it still has a good potential to move higher. It could actually drift towards the these highs right here, the high of last week near the 76.44 territory. Maybe it could stall somewhere here, then correct a little bit lower, and then move back to the upside. So again, for now, like I said, keep your eyes on this level right here, the 76.44. Could be a nice target right now, but of course, yes, also all eyes are on the 76.79 zone. So which if gets broken, then yep, would confirm a forthcoming higher high and higher levels could be met. Jumping to US dollar against the Japanese yen. So yesterday it did have a nice move higher here, and you can see we managed to push above that 106 territory. We also managed to push above the 21-day EMA here, but it failed to kind of end the daily candle above this area, which kind of raised a bit of concerns, of course, yesterday. But today, this morning, you're seeing a nice push higher here again, probably mainly driven by the equities, because right now the Asian markets are looking, well, I mean, as we have seen right now, Asian markets are looking quite strong. And yep, everybody's kind of jumping out of the yen, the safe haven yen, and yep, this is the result that we're having right now in USDJPY. The pair is pushing higher. It's currently testing its 21-day EMA. Let's see if it can actually stay above this area. If it can, then yep, that's wonderful. Good news for the buyers. We could see this one pushing toward the 106.48 zone, which, as you can see, acted as a fantastic area of support back here on the 13th of July, and then acted as a good resistance on the 3rd of August. So, but if that gets broken, then yep, it could open the door towards higher levels. However, don't forget that this move higher, this move north here, could be seen as a temporary correction, because we are still trading below this downside resistance line taken from the high of the 24th of March. In case this pair fails to stay above the 106 territory, well, I mean, yes, we could maybe consider the downside. However, we would consider the downside if it drops back below the 105.30 zone or somewhere around here, and then yep, we could aim for those lower areas. Quick update on GBPCHF. Here, basically, not much has changed from yesterday. The pair did have a nice rebound here from this 21-day EMA and this downside resistance line taken from the high of the 13th of December of last year. And yep, for now, guys, it looks like it wants to go higher. However, probably I'll take a very careful approach here and wait for that push above the 1.2037 zone in order to get a little bit more excited about higher areas. So wait for that break here, guys, and then aim for higher levels. Quick update on euro against the South African rand, and this is where this is what I was mentioning yesterday in my traders tea time, where I was covering this pair, because basically, I mean, maybe it's not something that you look at very often, but these exotic pairs do sometimes present themselves with nice opportunities. So for now, what I was saying yesterday, that keep your eyes on this 20.9160 territory, which, as you can see, yesterday also acted as a fantastic resistance level The pair yesterday formed a doji here on the daily chart, so basically kind of indicating that there is a possibility for a correction here to the downside. And if you look at our RSI as well, I mean, it is sitting quite over stretched here on, so it's in the overbought territory. However, of course, for that, in order to kind of get a little bit more comfortable with this idea, of course, keep your eyes on the RSI. If it starts falling back below the 70 territory here, then yep, there is a good chance for this one, for this pair to drift maybe back down, go for a bit of a larger correction here to the downside towards this upside support line taken from below the 22nd of July. But yeah, again, guys, for now, be very careful, of course. Also, keep your eyes on the 20.9160 territory. If by any chance it pops above this area and we see a daily candle kind of staying above this level, then, well, I mean, higher levels could be met. So that's why we are at a very interesting spot. At the same time, it could be very tricky. So be very careful. If this barrier continues to provide resistance, then yep, we see the RSI starting to fall back below the 70 zone, then yep, there could be a possibility maybe to see a bit of a larger correction here to the downside. And finally, EURUSD. So I talked about this pair a lot, and last week I've mentioned this idea of a possible range here. Yesterday I've also mentioned this. So yesterday we're still not we're not far from the lower bound of this range, but what I was saying, that keep your eyes on this 1.1725 territory, which, as I said, is the for now could be seen as a lower side of the range, and also that level is the inside swing low here of the 24th of September of 2018, guys. So inside swing low of the 24th of September 2018. This is that important level that we're keeping an eye on. And what I was saying yesterday, that if this area does provide support once again, excuse me, the pair could rebound and make its way back to the upper side here of this range, because at the moment it seems like this is what it's forming. And then, of course, as long as it stays in this little area right here, then we'll remain a little bit on the neutral side. If it falls below this 1.1725 zone, of course, it increases then the chances of a larger correction to the downside. However, be very careful near the 21-day EMA, but of course, if that is just seen as a temporary obstacle, then all eyes are going to be on this upside support line taken from the low of the 14th of May. But again, we need that confirmation break. We need that daily candle staying below this 1.1725 zone, and then, like I said, we could consider maybe a bit of a larger correction to the downside towards this upside support line. So, guys, I really hope you found it useful. So, yep, thank you very much for tuning in and joining in, and for watching this video till the end. So I really appreciate it, guys. Thank you very much. If you want to catch my video later on, my trader's tea time is always 13:15 GMT time. I'll pick up on some of these instruments and some maybe new ones, and then yeah, we'll take it from there. So have a wonderful trading day, guys. Stay safe, both health-wise and market-wise, and I'll see you later. Thank you very much, and bye-bye.